Fed doing the unthinkable, brace for impact, silver flies high. Wow, silver really flies high. And as we get into this, we're going to see how what the Fed is doing is going to directly impact this silver that I'm holding in my hand. Something crazy just happened in the US economy, and this could change things forever. This is a headline from Bloomberg that says, Fed risks 70s mistake. When we hear that, we tighten our jaw because nobody wants to go there. If it cuts rates too soon, T. Rowe Price, such a strange name, that T. Rowe Price, I can never get it out of my mouth. T. Rowe Price is alarmed. There's a massive fear that has everyone, including the big fund managers and the central bank elites. Inflation is going to come back. That's the fear. And it's going to come back in a large way, and it will come back so much that consumers see it coming. I'm going to break this down to show you if this will truly happen. This article says that Jerome Powell said very early on he's a student of what happened in the 70s. We hope so, because as silver stackers, we all are students of what happened in the 70s. He said this on Bloomberg Television. If they go ahead and start cutting now, I think they're in danger of making the same mistake. So this article says in the 70s, the Fed cut rates before inflation was fully vanished. That is the nightmare, of course. Maybe the Fed has not done enough to get rid of inflation. That's the thinking. They may need to do another cycle of raising rates. Yes, you heard that. Another cycle of raising rates. Something has changed in the U.S. economy, and it's happening in a big way. The consumer price index is highly coordinated with gas prices, correlated with gas prices. And we've seen recently that gas prices are rising in relation to the consumer price index. The reality is that consumers cannot afford higher prices at the pump. We know that. We know the economy cannot handle higher prices. What's really driving inflation is not higher prices. We know that if prices increase, then consumers simply will not spend. That's the basic math. We all know that. The key part is that spending is driven by wages. Now, this is important. We know that even during a recession, average hourly earnings goes up, but weekly hours do not go up. In the 70s, total compensation rose, then with a lag, inflation followed. It was a lag. If we're going to see a repeat of the 70s, then we should probably see the same thing today. But today, we don't see any signs of a revival in total compensation. It's actually lower. So for everyday people in the trenches, we should not be worrying about inflation coming back anytime soon. This article states that Powell reiterated last week that the U.S. central bank isn't in any rush to cut rates as policymakers await for evidence that inflation is slowing. Vail said he is never too optimistic about the rate cut the market has priced. He says stocks dropped Tuesday with the S&P 500 index seeing its worst day in almost a month after solid economic readings boosted betting that the Fed will keep rates higher for longer. T. Rowe Price, meanwhile, is dramatically neutral between stocks and bonds. He does still think there can be some benefit from diversification with bonds, and added that having a real asset within the portfolio is worthwhile. Now, when I hear that, real assets, I'm just like you. When I hear real assets, I hear this in my hand. Let me take this cover off so you can really see how amazing this is. I think silver. I think all the silver we've been stacking. When I hear real assets, we are 100% real assets. Those of us in this silver stacking community, and especially with the price we've been seeing the past 2 days with silver. Oh my God. I mean, that is exciting. That is really exciting, and still within reach. Still absolutely within reach, right? Not like gold. Gold is still on Monday. I was making my predictions, kind of thinking in the back of my head that I was being overconfident about my predictions with gold. And now gold is actually outperforming me. So I'm really excited. This has been a great week for metals. And still, silver, I say go in. I mean, I'm not a financial analyst. I'm just a stacker like you. I'm just a regular guy making these videos. And I'm still in on silver. I'm still picking up silver. It's still within reach, absolutely within reach. And I say, I want to get more of these buffaloes. I'm going to keep filling tubes. I mean, this is absolutely an exciting time and a time to keep going with silver. Let's continue. Now, this article says, regarding inflation, The article shows us that the link to inflation has two components: total compensation and energy cost. Really, consumers are unable to afford to spend on the discretionary side of the economy and on energy at the same time. If we look at total compensation and include prices, we see that oil falls during times of compensation increases. That's obvious. When consumers have more money, they will actually spend it. The article tells us that Bostic expects one recap this year. Oh, sorry, one rate cut this year in the fourth quarter. Just one. Yes, you heard that. He said just one. Bostic said, I think it will be appropriate for us to start moving down at the end of this year, the fourth quarter. If that trajectory slows down in terms of inflation, then we're going to have to be more patient, he says. Now, this shows us that the Fed believes, really, what they're thinking is that they have over-tightened. This tells us that they made a mistake during the pandemic and they're trying to catch up. Of course, they're doing this at the detriment of the U.S. economy. Of course, this experiment, right, is at the detriment of us. Of course, they're not sure when and how far they should pull back. Bostic said inflation hasn't moved very much as of late, and that he is concerned by some secondary measures in the price figures. And while he isn't hearing many cracks on employment from his contacts, he signals a negative turn in the labor market could impact his case for just one cut. There could be a big mistake in this thinking as hourly rates are cut eventually. Eventually, with hourly rates being cut, eventually that will lead to jobs being cut. And then we have a drop in the labor market. So it kind of feeds itself. And as I see all of this back and forth between central bankers and rate cuts and easing and tightening, and what we're experiencing this week with this silver, here's a nice bar, with this silver that we're stacking, I'm super excited, and I'm going to my local coin shop again today. I'm going to get there before it closes because I'm still picking up silver. This is still within reach, and I'm still excited about it. I know when it comes to gold, when I see prices jump, I'm always telling people, don't buy yet, hold, let it even out. But silver is still within reach, and sure, maybe I am going against my own plan. I just maybe that's my. I don't think it's fear of missing out. I don't. I'm just excited. Silver has been stagnant for so long, and to see it move like this is just thrilling. Yeah, I'm so excited to see where this is going to go. If you'd asked me 6 weeks ago, I was just numb. I was just like, I had no excitement for silver. Now, finally, we're moving. We are moving. So I'm still picking up silver. I think it's absolutely within reach. And hey, if it really starts to fly, really like going out of reach, then sure, I will follow the rules. I will just hold and I'll wait and I'll watch. But for now, I'm still excited about silver, and I'm still absolutely going in